All right, tell me if this sounds interesting to you. You own a few hundred shares of stock XYZ, and we apply a little bit of pressure to it to help generate a few hundred extra dollars per month. Maybe that pays half the mortgage, maybe it's the heating bill, maybe it's the groceries for the week. If you're interested, stick around. So I have a simple strategy for generating a few hundred extra dollars a month for me personally, and it primarily involves not panic selling. Now we're gonna get into this and I'll explain what panic selling is. But if you already own shares of a stock, there is a great way to catch it when it's dipping and then sell it when it's popping to make a few hundred extra dollars per week. I'm gonna show you exactly how I did it. And the reason why I'm shooting this video today is because it happened this morning. I had a perfect setup last week, and coming into today, I got a pop, I took some profits, and I want to talk about it. So with that, let's jump into the charts. I'm going to open up my TD Ameritrade Thinkorswim platform. I'm going to turn on all my trades so you can see all my buys and sells, and I'm actually going to show you some history as far as other buys and sells I've had. That way, you can understand how this very simple method works. Now, with everything I do, I'm not telling you to run out and do this. I'm just showing you what I do. So take it with a grain of salt. If you like it, maybe modify it and see if it fits into your trading life. If not, no big deal, I understand. These are just my opinions. Let's jump into the charts. Okay, so what I did was I screenshot my TD Ameritrade Thinkorswim platform right now just to put it into the whiteboard so I can show this to you and draw on it a little bit. But this is ticker MDB, and you can see right here it's MongoDB. They are a provider of database structures, and they're sort of the dominating force within their niche. I'm bullish on them. I like the stock, and that's the reason why I put this strategy in play with MDB. Now, to set this up right, I just want to say up front that this works in stocks that you're owning, that you're bullish on. So if your opinion or your sentiment surrounding a stock is bullish and you think it's going to go up, then this is the perfect thing that I like to do in that scenario. So I'm bullish on MDB, and I think it's going to continue to move to the upside. So what I like to do is, when there's an exaggerated pullback and it seems irrational, it hasn't changed the fundamentals, maybe it gets a downgrade from a random analyst, things that cause a little bit of drama in the market and it has a sizable pullback, I like to go in and I like to add a tiny percentage piece to my position size and then hold that into the next pop and then sell it. Now the questions that I always get are, if you're adding to your position, why not just hold it forever? Why sell it into a pop? If you're bullish and you think it's going to go up, why not just hold those shares forever? And my answer to that is, I have enough exposure on this stock that I don't want any more. I don't want to keep adding to my position and holding it long term. Now, that doesn't mean I'm not bullish on it. I am bullish, but I have the appropriate size that I want right now. So when I catch a dip and I add a tiny piece to my position, it's meant to be temporary into some strength so that I can get rid of it, take profit, and then be back at my original size, which is all the exposure I want to the markets with this particular underlying. Now, if you wanted to keep growing your stock size larger and larger and larger in a specific underlying, then by all means, just keep buying and holding on every dip. But for me, in this situation, I have enough shares, I don't want any more, but when I get dips, I grab a little. When I get pops, I sell that piece. And then I use the LIFO and FIFO alterations to make sure that I'm selling the right piece of stock. And if you don't know what I'm talking about in terms of FIFO and LIFO, check out this video right here. Yesterday we talked about this. We dove into what that means, first in, first out, and last in, first out. Check those out because it'll be super informative. Watch that first, then come back over and check out this video. So you can see right here historically, let's go back right here to this big red candle. So MDB had a massive 2-day fall off. And the minute I saw that, because I was still bullish on the stock, I said, I'm gonna go ahead, I'm just gonna pick up 25 shares and I'm gonna hold and see if I can get a pop. And then you can see what happened. It fell a little bit more and I was tempted to add more, but I didn't want to get too big in this stock. So I just went ahead and just held the 25. Then we got the pop over these next 4, 5, 6 days. And as it pushed up to 130.96, I sold those shares into strength. So I took, I think, a little over $8 per share profit on this particular move. And some people may say, it's $8, but it's only on 25 shares. And my answer to that is yes, because you don't want to be too big. This isn't meant to hit home runs. This is base hit after base hit after base hit. And when you do this for enough months in a row and you catch little dips and pops, it can add up over time to be a significant amount of money. So my success with this is the reason why I'm shooting this video. If we move forward a little bit, you can see over here, and let me grab my pen. I went ahead and I decided to go ahead and I bought 40 shares down here. I was adding to my position, but then I bought 25 on this dip down, and then we had continued exaggeration to the downside, so I added another 25 shares. So in this specific example of what happened today, I'm referring to this position right here, that lot, that 25 share lot at 125. I picked those shares up last week, and then what we've had is a run to the upside, a little bit of a pullback, and I've been trying to get into percentages of when I'm going to take profits. If you get a 10% move to the upside, that's really significant in my opinion. So 8 to 10% is really nice to sell these shares into. And if you get a 8 to 10% pullback, that's a great position or a great time to add that little piece of share. So get this big pullback, 8 to 10% or more. I grabbed 25 shares here at 125. And then I've just been kind of watching it over this past week. And it stalled out in here, stalled out in here. And I was thinking about maybe taking it off and just taking a little bit of profit. But then the Christmas gift landed the day after Christmas. Today, we get this big pop to the upside. And I dumped 25 shares at 136.14 and ended up with in excess of $11 per share. $11 a share is amazing. I am so happy with it. And it ended up producing about $280 in profit. Now, if you do that twice a month, that's well over $500 a month. And this routinely comes up where a stock will have a pullback. Another example is Facebook, and I can actually bring Facebook up real quick. Okay, so I've got Facebook up on the chart, and I'm going to show you another example of this. So Facebook, I'm very bullish on, and I plan on holding Facebook for the indefinite future. I don't know how long I'll hold it. I'd like to hold it for possibly years and years. I'm very bullish on it. So if you feel convicted that you're bullish and you think you're going higher and you already own a position, which I do, then what I did was, let me turn on my trades. I'm going to dive into my account here and show it to you. Turning on my trades. So you can see we were moving up. We got a pullback. I added 5 shares. We then got another pullback down here. I added 5 more shares. And then we started moving back to the upside. Now, this lot of shares, I haven't been willing to let go yet because I think it can go higher. So I'm looking for more out of these shares that are riding along. But look what happened. I had good fortune. It pushed up, pulled way back. I added 5 more, and now we've gone up again. So the reason I do this is to add shares at a lower price so I can take them off at a short time away for a small profit, but a profit that adds up over time. And everyone can come up with their own percentage. You know, if you say you commit to, I want to make 10% on the shares before I sell them, that's great. Or even 15% or 20%. Or if you want to scalp it a little more quickly, you could even say 5 to 8%. Whatever works for your trading style will work with this specific setup if you're bullish on the stock. Now, one reason why this doesn't work for some people, and I wanted to reference this, is panic selling. We talked about it earlier in the video. Panic selling is when you buy a stock and it's working its way up and then you get a hard push to the downside. Great example is the position I had on MDB. I had that 2 to 3 day stretch where it pulled way back. Now, that causes a lot of people to get emotional, and it causes them to dump their shares, especially if they have profit. If they have profit, they get a slam to the downside, and they still have a little bit of profit. A lot of people will panic sell into that scenario just to preserve the profit they have. And then what happens is, in the next day or two, the stock continues higher without them. So I've been trying to stay disciplined and avoid panic selling,
Because anytime I've ever done it, and believe me, I've done it, it never works. It always goes higher. Well, not always. It usually goes higher. Of course, you can panic sell, and if it continues to the downside, then you're a genius, and great, that works perfect. But most of the time, if you're bullish on a stock and you're invested in a stock and you feel good about it, and you've done your due diligence, and you've looked at the balance sheets, you've looked at the technicals, and everything's good, then when you get a pullback, view those as opportunities, not as scary panic sell moments. So this pushed up, pulled back. I could have sold in here. I could have said, oh no, it's dropping, I'm going to sell. Then it continued up, and then we had 2 big days down. And I actually remember this. There was a probe into Facebook by the was it the Justice Department, and it caused this big push to the downside. And I said, okay, Facebook has 0 debt on its balance sheet. I'm buying 5 more shares. The company is still intact. This was outside drama causing a pullback in shares. This was panic selling in and of itself. People were panic selling to get out of it because they thought the end of the world was coming because the Justice Department was probing into Facebook. And yes, lots of crazy things can happen to Facebook, and Facebook could go through turbulent times in the future. The underlying we're talking about is irrelevant. It's just finding dramatic moments in the market to get dumps to the downside so that you can see an opportunity to grab a few shares as it runs back to the upside. Now this one's looking really good. This pullback here, I kind of thought about adding here, but I was a little nervous because we're away from these moving averages. I think Facebook could pull back a little bit before we go higher, so I passed on that opportunity. But I've got 5, 10, 15 shares that are just kind of hanging out, sort of in the 190 area, and who knows when I'll take them off. Maybe I'll hold them forever. Maybe I won't. Maybe I'll just let them ride along freely and then take them off in the future when we get another over-exaggerated pop to the upside. That's the other side of the equation. You get panic selling to the downside, you get exaggerated pops to the upside. So when you see a big green candle come in and it seems way too good to be true, that's probably a great time to take a little bit of profit, to sell these small ride-along shares. Because chances are it's going to then come back off that high for a little bit and maybe even give you an opportunity to jump back in at a lower price. So this is just my way of not being overexposed in a stock and just continually buying shares, hand over fist. I just like to hold a core position and then add a few here and there as we dip and pop, dip and pop. And that works really well for me for earning an extra few $100, even $500 a month. And I wanted to come out today and I wanted to share that with you guys. I want you to comment below. I want to know if you have used this technique and if you're currently using this technique on any stocks. And if they're large caps, which stocks are they? I want to know what you're trading today. So drop a comment below, and hope it was a green day. Merry Christmas, happy holidays to everyone, and we'll see you next time.